In fact, we've got market experts Mayuresh, Joshi of Angel Broking and independent market expert Dhaval Vyas to take us through their thoughts on all these newsmakers today. Gentlemen, morning. Thanks so much for taking the time out today. Let me start off with the gainers that we're seeing. BPCL clearly is the big one that we're watching out for. Mayuresh, any thoughts here when we talk about the OMC pack, and in that, how do you see BPCL? All right. Mayuresh, I'll come to you in a bit. Let me get that audio fixed with you. But Dhaval, what are your thoughts when we talk about BPCL as far as charts are concerned?
See, the chart of BPCL is looking good. Basically, we saw good buying in last 2 days' time in OMCs. And BPCL seems to be heading towards 1,000 levels in near time. So overall, it would be a hold with a stop around 958 for a target of 990. If you were to pick a specific stock, only one stock from OMCs, then it would be Hind Petro, because Hind Petro's structure is much more stronger, and the momentum is quite strong in Hind Petro compared to BPCL.
All right. Fair enough. So that's as far as the charts are concerned and how the OMC pack is looking like currently. But, Mayuresh, I was asking you as well earlier, what do you make of BPCL in this entire OMC pack? Because they've clearly been the big outperformers in the last, 14 to 18 months now. Is there still potential left for stocks like BPCL?
Morning, Priyank. Clearly, I think the sentiments and the trading momentum should continue for a lot of these OMCs.
Okay.
Primarily on two counts. A, I think the under-recoveries which the markets have now largely factored in, going down substantially reduces their debt, reduces their interest and finance burden. And B, I think you will see stability in GRM going forward as well. So if you combine the two, I think the earnings estimates in terms of EPS sensitivity goes up dramatically. And if you talk about decent marketing margins being increased over the next few months and quarters, that creates a further impetus onto the stock. Clearly, for a stock like BPCL, the exploration opportunity is also pretty huge. So in that sense, I think the momentum would continue for a lot of these OMC stocks, and the numbers in the quarters to come, I think, would reflect greater earnings stability.
All right, that's as far as BPCL is concerned and how the outlook's panning out for that point. But Dr. Reddy's is the other one that's been showing decent strength. Pull up DRL for you, and it's actually had a pretty healthy gain, 1% higher today. Any thoughts here when we talk about DRL and how one should be looking at this pharma major, Mayuresh?
So clearly, Priyank, I think this stock was one of our favorites from lower levels. It has exceeded our fair value estimates, specifically from an FY16 perspective. Nothing taking away from the numbers. The numbers have been exceptionally well for Dr. Reddy's. And though there were no new approvals coming through the FDA perspective, our take is that the slew of launches slated to come the latter half of FY16 and the complex generic molecules DRL has done a lot of R&D on. But you'll see a healthy kind of approvals going through from FY17 onwards. So our take is that the stock, in terms of earnings visibility, should do relatively better over the next few quarters. However, I think the valuations are a little bit stretched at this point of time, specifically from an FY16 perspective. So I think investors, as we are saying time and again, who have held on to the stock at lower levels, should continue to hold on to a stock like DRL.
All right, hold on to the stock if you've already got it in your portfolio, is the view coming in from Mayuresh there. But Dhaval, on technicals, how do you read DRL at the current level?
We had a buy around 3,800 when the stock broke out of the range, basically. Okay. And the target was 4,200. Even though the target is getting hit, but we believe that the stock still has some momentum to move upward. So it would remain as a hold for a target of nearly 4,400, 4,410 with a stop around 4,260. Overall, the stock is looking to make a base around 4,100 to 43 range. So let's see how it moves. But 4,400 looks very mature.
Dhaval, if I caught that right, you're saying 4,400 looks likely in the immediate term for DRL?
Yes.
All right, and you would still advise some of the more short-term players to actually look at this counter even at the current level, if I'm gathering that right?
Exactly.
All right, fair enough. So that's a technical check coming in as far as what we're seeing in terms of DRL out here. So far, the stock's been in positive today, up 7 to 8%. Pull up the RSI once again, because the RSI is at an interesting level for DRL. Almost hitting 78 is what we've been seeing. There you go, 77.7 to be precise. Clearly in the overbought zone is what we're seeing for this counter. All right, staying with the pharma pack, Divi's Lab is the other one that we're tracking earnings impact for this stock, and numbers have been pretty good. Stock's been up today, 6.3, 6.2%. Mayuresh, this one on your radar, Divi's Lab?
So clearly, I think, Priyank, the stock has given a decent set of numbers. And clearly, as the management guided in terms of FY16 revenue growth outlook, they have actually petered down their estimates, at least in the quarter gone by. So I think the kind of capex that Divi's has on its mind in terms of the new greenfield capacity expected to come up in Kakinada of 500 odd crores, maintenance capex of 80 to 90 crores. And clearly, I think the EBITDA margin is still staying between that 37 to 39% range, more or less attributed to low margin generic business. And clearly, I think the domestic supplies would take a toll in terms of how the EBITDA margins will pan out. Clearly, I think what has stood out for them over the period of time has been their API business. The nutraceutical segment has also seen a steady growth going forward. But clearly, what we foresee going forward, margins stabilizing, revenue growth in terms of top line moving between that 16 to 18% range over the next couple of years. And the only headwind that possibly can cause a deterrent to the stock is their long-term averages and the kind of valuation it derives at around 21 times FY17. It's a tad bit higher than its long-term averages. So again, I think it's the same strategy that we're probably looking at. If investors have held on to the stock at lower levels, continue holding.
All right, stock's been pretty steady today, 6.3% higher. Dhaval, any technical thoughts here when we talk about this counter?
We have seen a relevant gap today, but normally this stock doesn't sustain much up moves. So there would be a downward gain. So the idea is to exit as of now, locking your profits and keep your capital safe. And in case down move goes around 2020, then it would be again a buying opportunity, but not as of now. So it would be an exit. If you want to shift your capital in the same space, then it would be Torrent Pharma, which has been, as a disclosure, our buy pick from 816 last year, Diwali pick. So overall, Torrent Pharma looks good around 1500 for a target of nearly 1750 in next 6 to 9 months.
All right, so you're saying basically look at this counter at a more reasonable level of 2020. Take every higher move as an opportunity to book out. If you've got Divi's Lab and Torrent Pharma probably is the other picker in this space that Dhaval is looking at right now as compared to Divi's Lab. All right, fair point taken in that context. Let's take a quick break right now. When we come back, we discuss some more earnings. H. Kumar of MRPL will be joining us on the other side. Stay tuned. Welcome back. You're watching Market Movers on Bloomberg TV India. Well, we're in the midst of earnings season and we've been getting a whole host of numbers over the weekend as well. MRPL reported an overall, an operationally strong quarter with a profit of 406 crores versus a 36 crore loss last time. Income, however, has fallen to 11,317 odd crores. Stock's been under some bit of strain today. Let's get some perspective on that. H. Kumar, Managing Director at MRPL, joining in. Sir, can you run us through the key highlights that we've seen for Q1 and how you've seen how the quarter's really played out for you operationally?
Yeah, we have for the quarter we have recorded a net profit of 406 crores and a PBT of 510 crores. Overall, we have registered a GRM of $6.62 per barrel. The throughput has been quite good at 3.89 million metric ton for the quarter. And what is significant is, we have been able to bring down the exports to around 30% of the total sales, which in the earlier corresponding quarter was more than 40%.
Fair enough. What's the GRM? What is the GRM a year ago number? And other Indian refiners have actually posted very strong GRMs. Do you think 6.62 is a little bit on the softer side? Just to get some perspective from you on the GRM and how do you see the road forward?
To answer your question, the first part, 6.62, the corresponding GRM for Q1 of FY14 was 0.66. So that's a comparison as far as MRPL is concerned. about the earnings of the other refineries, I would not like to comment. But what is of importance to MRPL, we could commence the polypropylene commercial sales on 18th of June this year. That means on almost at the end of the quarter, first quarter. So those numbers are really not got added up, which should have otherwise pushed up the GRM further.
Fair enough. In fact, taking that point forward, your polypropylene unit started towards the fag end of Q1 as well. So that didn't get adequately captured in the GRMs. How much value creative will it be to margins going ahead from here?
See, we are looking at a margin of $1 to $1.5. Anything between $1 and $1.5 across the barrel for the year, maybe for a full year. Probably for this the FY16, we are looking at this contribution from the month of mid of August.
All right. What about the export contribution in the overall revenue pie has somewhat receded? Is that a conscious decision, just to take us to get some perspective from you on how do you see that panning out for the remainder of FY16 as well?
Yeah, it is a strategy because you are aware we realize higher prices when we sell in the domestic market, because export is always a little on a discount to the domestic product, domestic prices.
All right. Just coming back to your GRMs at 6.62, are these sustainable levels? Gasoline deltas are almost peaking out for Asian refiners. So in that backdrop, how do you see GRMs panning out?
Yeah, I would look at the GRMs going up as far as MRPL is concerned. Of course, not withstanding the lower cracks on gas oil now, because if you see the gas oil cracks have suddenly come down to around $8-9, and of course what is supporting is the gasoline crack at the moment. Maybe this has been the trend in the last 10 days. So gas oil is a matter of concern. But we will get some compensation from the, polypropylene numbers.
Retail plan of around 100 outlets in and around Karnataka. Any timeline, pricing and product offering at the pump level?
On the pricing, it is too premature and early for me to comment. But as regards the expansion of the retail network, our plans are almost kind of, set, and maybe by the end of the year, by the end of the last quarter, you will see some of these outlets up and running.
All right. In fact, I also understand that ONGC has almost 1,100 licenses and you've got 500. Is 1,600 the long-term target?
Yeah, this is the number available to us. So initially in the first phase, we are looking at a number of 100 to start rolling and gather a critical mass. And subsequently, we should be, in the coming years, we should be able to expand the market network.
All right, fair enough, sir. We'll leave it there. Thanks so much for taking the time out to talk to us today. MRPL stocks down somewhat 7 to 8% today, but on a YTD, stocks up 59 to 60% is what we've seen on this count. In fact, let me just get back to our market experts to get a quick comment on MRPL as well. Mayuresh, any thoughts here on MRPL? Numbers have been a little bit of a mixed bag. GRMs are strong at 6.62 when you look at it from a relative point of view. What seems to have been the disappointment then?
So clearly, Priyank, I think the entire question in everybody's mind would be whether they'll be able to sustain their GRMs going forward. Looking at the way how gas and naphtha cracks are panning out, looking at the numbers of Singapore GRMs have panned out for the month of July, the doubt is whether the GRMs would be sustained at these levels. So overall, I think capacity expansion plans, capex will take a toll on their cash flows, at least from a short to medium term perspective. And again, I think the matter of ambiguity on how GRMs will pan out.
So you're advising clients to avoid this for now, or are you looking at this kind of dips for as an opportunity?
No, I'll clearly wait. I'll wait out for at least a quarter to see how the results are panning.
Fair enough. Let's see how the GRMs then probably stabilize in the next couple of quarters and get a more realistic picture as well. But Dhawal, technicals on MRPL?
See, nothing great on charts for MRPL. It has been trying to cross basically 80 to 85 levels since 2009, but it hasn't been succeeding. Overall idea is 85 would be a very crucial level to watch out. On the downside, we would wait for 60 to 65 levels to come before initiating a buy call. So as of now, it's a purely avoid call.
All right. In fact, we've just got less than a minute to go on the show as well. Mayuresh, want to squeeze in one more counter that's been in focus today, UCO Bank. We've been tracking earnings for that stock as well. Now, if you look at UCO Bank, it's been actually having a little bit of a mixed trade today. It's down 2.8, but it's recovered from the day's low. Any quick comment on UCO Bank, Mayuresh?
So clearly, Priyank, I think I'll stand with my stance on how the asset quality might pan out for a lot of these banks.
Okay.
And stability is something that I'll be looking for at least for the next couple of quarters. Secondly, I think the recap side might create impetus from a short to medium term perspective. But clearly, I think internal flow is still looking weak.
All right. So avoid UCO Bank is what Mayuresh is saying there. Dhaval, quick technical check on UCO.
UCO Bank has been trading on a downward channel since November of 2014, and nothing spectacular in the charts basically. No good volume basically. So we would again avoid, in case the stock moves above 58, then it would be a fresh buy, but not as of now.
All right, so above 68, only a fresh buy, but for now you can avoid, is what Dhaval's views on the technicals as well. RSI at 47.4, again, pretty much in the center is what we're seeing. All right, gentlemen, we leave it there. Thanks so much for joining us today and sharing your thoughts on the markets, as well as a couple of these newsmakers that we've been tracking since morning. Well, it's a wrap on this edition of Market Movers, but coming up next, we put the spotlight on the auto sector. Is the worst over for the industry? We speak with Jatinder Mehta of Omax Auto and Paul Zakaria of Atul Auto. Stay tuned.